All right. Thank you, everyone, for joining us for episode 3 of the Mindful Millions podcast. Just a reminder that the goal of this podcast is to empower individuals to reframe their relationship with money. And today we have Julia Carlos, an accountant who graduated from California State University, Fullerton, with a Bachelor's of Arts in Business Administration and a concentration in Legal Studies Management. She's had
Mhm.
years in accounting. I actually was introduced to her first by having a quick conversation with her husband,
Mhm.
who is also her business partner.
Mhm.
Um, and I'm going to go ahead and just turn it over to you to talk to us a little bit about what inspired you to become an accountant. And if you can also highlight what's the difference between being an accountant or how you can be an accountant but not be a CPA.
Okay. Well, thank you for having me on the show, and I'm really excited to be here. Um, so, well, I guess what inspired me was I had a parent that was a small business owner, and she, my mom, worked with her hands, and she owned her own business and had a great plant business and put plant yeah, she did the indoor, like took care of indoor plants in restaurants and churches. And so she had this great business for like 40 years. And
Oh,
so when I was like 12, 13, she was like, hey, can you start doing, my billing and stuff like that. And that's how it was. Just, like, here's
a
what I put in.
necessity.
Yeah,
Yeah.
here's what I put in. And we need to build the client. And so that's how I got my feet wet.
Yeah.
Um, and just a very I
Real world
guess,
experience.
yeah, I was kind of thrown into the deep end. But it was good experience, because when I did get into college, I did get a job with a subcontractor in the housing industry. And I started as the receptionist. I did a lot of work in accounting, so I saw the accounting cycle.
Awesome.
And understanding how we go from A to B to C to D to E, on and on, because
Hmm.
accounting has a life, especially in a small business. And so Renee and I were college sweethearts. We met at school, and he went the traditional, graduated with an accounting major.
Hmm.
And I kind of toyed with the idea of law,
Hmm.
and kind of left it up to, maybe I want to go to law school, maybe I don't really know, but I really like law. So my emphasis is in legal studies management, which is business law.
I loved business law when I took it in college, just as a required
It's
general course.
Yeah, it really, I mean, even before that, just anything that had to do with law.
Yeah.
But you watch like the legal movies, you're like, oh, it's so exciting. And so that's kind of where we got started.
Hmm.
He started working with the accounting firms, just maybe not regional firms, but just below that. I continued to work in accounting, actually, for this subcontractor. 2008 hit, and we went down to a skeleton crew, and
Wow.
then I became the controller.
Wow. Right, right place, right time. Well, I'm like,
You
that
could,
doesn't even sound right because it's like bad time, right place.
right. Right. And that was another one of those instances in my life where, I was thrown into the deep end and
Yeah,
had to learn it. Um, and sometimes the down and dirty way, but
yeah,
it's one of those things where a sailor um doesn't learn how to sail through the storm because he read books.
right.
He can sail through the storm because he
Because
sailed
he
through the
did
storm
it.
before.
Yeah.
So I have a lot of
Experience,
hands-on
which
experience.
it's making me
And
realize like you didn't even need the CPA when you have all of that.
right. Well, and this was more of like bookkeeping. I was in charge of
Mhm.
you know billing billing out the accounts receivable, doing the accounts payable, the G&As,
Hmm.
and making sure we had money to pay the bills,
Right.
and talking to the other people in the company going, hey, we can't spend, or okay, we can spend this much on material, or and those are the cases where that really sharpens your skills.
Yeah. And it really is cash flow management for a business. What the bookkeeper
Mm-hmm.
is focused. Budgeting is just cash flow management for your household. So I
Exactly.
see like a lot of parallels to businesses and just households, or I kind of, in a way treat them the same. Same way a business has core values, we need to identify your household's core values. And
Right.
yeah, I'm really big about that. And we're going to dive into a lot of those topics, even further, but I'll just share a little bit about myself. I'm a fee only financial planner. And I actually was an accounting tutor in college. I had a rocky college experience.
Okay.
The first time I took the accounting class at my university, I did not pass. And then it wasn't
Okay.
until I had gotten kicked out, was going to a community college, that I took accounting again. Actually showed up to the classes. That was, I found, 90% of the work. But then just really enjoyed, well, the subject, and I think it just clicked. And
Mm-hmm.
so I got an A in the class, and that allows you automatically to be a tutor at the community college that I was at, which is awesome. And yeah, I loved it so much that when I got readmitted into my university, I considered switching my major from business management to accounting, but it was going to take an additional year and a half, and I really just
Mm-hmm.
wanted to get out. And business management is such a broad, subject that I think
Mm-hmm.
I definitely don't regret getting that degree, because
Mm-hmm.
I think it allows me to look at businesses more from like a business model,
Mm-hmm.
organization standpoint. But I still love accounting and bookkeeping. And now I help clients with tax planning. And that's why I still now work with CPAs and bookkeepers on a data. Yeah, it's more on a month to month basis.
Yeah,
Um,
and
Go ahead.
good. Well,
That was it.
yeah, and sometimes it takes somebody else explaining it to you.
Hmm.
Whereas, like, I was very similar. I did not like accounting, even though I did it count, like, in college. In college, my job, I did accounting. I did accounting before I was in college, and didn't,
Yeah.
like, the wheels were turning, but they just weren't, like, connecting. You know what I mean? And until I got the hands-on experience, I'm like, oh, I like this so much better than reading it from a book.
Oh my God. And yeah, going through the CFP education or any financial exam, when you start out in the finance industry, and I'm sure it's the same in many industries, you're learning everything from books, theoretical examples. And I think it's interesting that you first had the experience and then you got the book lessons and then you went back, whereas I didn't have the real world experience. I just learned from books and then went into the real world and realized the real world is not really how they teach it in books.
Oh no. Oh no. And that was a struggle for me as well, because somebody who had experience and did things the real world way, and having a professor tell me, no, you can't do that, or they're marking you wrong, and you're like,
No, this is how we do it.
but I work. Do you work?
Yeah. Yeah, exactly. Well, let's dive into, so now that you have a good understanding of who will be joining us for the rest of this episode, we wanted to start off by just sharing stories that we've encountered. First, to highlight the cost of not planning ahead. So, Julia, is there a situation or story that comes to mind where clients, if they had planned ahead for any of the various tax planning pitfalls that we'll dive into further, but go ahead and share what comes to mind?
Well, I have a lot of stories. Just when you think that you've seen it all, you haven't.
Hmm. Yep.
And I'm sure you can say the same thing.
My favorite saying now is things that have never happened happen all the time.
Yeah, yeah, exactly. But I wanted to get into just the differences between just the differences in accounting. So we kind of you brought this up, that just because you're an accountant doesn't mean that you're a CPA.
Hmm.
So there are many levels of accounting. Like I said, there's different stages of the life of accounting, particularly in business accounting. So,
Hmm.
everybody has to do their accounting. It's a requirement under some entities, and just a
Hmm.
good practice, even if, you're a
Yeah,
solopreneur or sole prop.
that's I stress peace of mind is, the accounting, the bookkeeping, budgeting. That's where
Mhm.
it's from.
And so you have something called a bookkeeper, and you really do not need any kind of any kind of education, formal education, to do books. Um, you can be a data entry person and still do the books. The problem is that you're not going to probably do the books right. And this is
Hmm.
something that we encounter on a daily basis. We get a small business owner's books because they go, well, this is what I can afford. And they contact a bookkeeper, gets outsourced to India,
Hmm.
and the books come back and they're a total mess.
Hmm.
Um, and so that's that's probably number one. We see a lot of problems with just anybody who is like, oh, I can make a business being a bookkeeper, and they can charge a small rate. And business owners go, okay, well, great. I don't know how to do this. Somebody else does, and it's not
Right.
too much. And you really get what you pay for. And
Agreed.
and then you get to us. So we are designated to do taxes. My husband Renee is an EA, which stands for an enrolled agent. So you have an enrolled agent. You have a C-Tech, who is
Hmm.
somebody who takes a 3-week crash course. That's what a C-Tech
Okay.
is. You have a CPA, and you have a tax attorney. So tax attorney, they can do tax resolution. For short, we call that tax res.
Would we
Um,
assume that the tax attorneys are most expensive out of those?
Typically, yeah. If you have a lot of issues with with your tax return, in terms of like you haven't paid your taxes in a while,
Yeah.
or something happens, then you need to contact the tax attorney.
Okay.
Um, a typical average business owner is not going to contact a tax attorney unless they have to.
Hmm. I'm
So,
sure.
but they can do tax returns. So I know some great tax attorneys out there. But typically,
Good to know.
they're more of the tax resolution. Um, you have a CPA,
Hmm.
and so their designation is set by the AICPA.
Hmm.
They can do taxes. They cannot do tax resolution. They
Mm.
are only certified in the state that they are practicing in, and they can do something called audits, reviews, and compilations.
Mm.
So oftentimes, big corporations, they need audited financials in order to get a
Hmm.
loan from the bank. So that's when you need an audit, review, and compilation.
Oh, got
Most
it.
So a lot of these CPA firms, you got the big four, you got the
Hmm.
regional firms, their bread and butter is typically these audited reviews.
Hmm.
Um, Most small businesses do not need an audited review. They don't
Hmm.
need they just don't need to go through all that, and it's really expensive. Most banks will actually accept unaudited financials. If they look
Okay.
clean, they'll take them. Um, and
Yeah.
usually they want a balance sheet and a profit and loss statement, or an income statement,
Yeah. And
whatever
a
software
bookkeeper
you
can
use.
normally help you create those, right?
Right,
Bookkeep.
right. A good bookkeeper.
Yes.
Uh, and you'll probably need 2 to 3 years of tax returns.
Okay.
Now, an EA, or an enrolled agent, is somebody who's certified through the IRS, and the IRS says an enrolled agent is the best professional to get your taxes done with, because their certification They're certified through the IRS. We're not
Hmm.
IRS agents. We don't work for the IRS. We just are certified through
Yeah.
the IRS. And
And
we
that
are,
definitely is a
go ahead,
takeaway. The EAs are registered through the IRS, and the CPAs are not through the IRS. It's
through the
through AICP.
AICPA.
Yeah.
Yeah. So um, an EA can actually do tax resolution just like a
Hmm.
tax attorney. And we're the most qualified person, according to the IRS, to do a tax return. So we're kind of in between a tax attorney and a
A
CPA.
CPA.
Now
I
we
love that.
can't do, yeah, we can't do audited reviews.
Hmm.
That's out of our scope of our certification. We are certified in all 50 states, so
Hmm.
we can do tax returns in all the states that require a state tax return.
Yeah. No, that's awesome. And I mean, literally, I feel like I have now a better understanding of the difference between EA, tax attorney, CPA. Was there another one? Was
There
that
is a
three you were
C-Tech.
covering?
Yeah,
A
there is
C-Tech,
a
yeah.
C-Tech. Yeah, you go to, you have a really easy return and you go and
Oh,
go
is
to the
that like
mall.
the VITA? Yeah, my university used to offer like it
Mhm.
was a course, and then you would be able to file taxes for low income people
Yeah,
for free. So
yeah,
I'm guessing that they might be C-Techs.
yeah, yeah. There's
Wow.
some large tax companies that yeah, their people are C-Techs. So you can get it and you can
Mm,
actually start a business and file tax returns, but you're just not that qualified.
yeah.
And
Yeah.
really
And go ahead.
and really experience is the best teacher. We've been in the
Yeah.
business for over 20 years. So,
Yeah, no, and going back to what you mentioned, that you see that on a daily basis, that just books are not, or people are doing the books and then they think they're doing them right and they're not. And even myself, I tutored accounting. So when I started my first coaching business last year, I'm like, I'll be able to do the books, no problem. I was excited, got QuickBooks online, and I would open the software and was like extremely overwhelmed by having to learn it. And then my concern really became, am I doing it right? And I had zero confidence because at the end of the day, it was again a new tool that I was trying to use, and I ended up getting a bookkeeper, which I'm very happy I did. And
mhm,
when I interviewed multiple bookkeepers, which is what I always encourage clients to do when you're considering any relationship. I think it's or any financial legal relationship. It's good to get at least 2 to 3 interviews
mhm,
in before you decide. But yeah, I ultimately was in that boat, and I even have, business management experience, or like just the education, which I think I can only imagine someone that doesn't have a business degree, how they feel starting a small business and handling their bookkeeping. But then again, hearing stories about like your mom being successful at it and you were able to just
yeah,
help her, that's honestly very inspiring.
yeah. So
So,
we encounter all throughout the year, just people that think that they can do their own taxes um, or their own books, and really there's a false sense of security in, let's just say certain software companies, they do a great job. They have an excellent marketing department
mhm,
and they
mhm.
do a great job of convincing people that they can do their own taxes and accounting.
Oh, that's,
um,
yeah. Mm,
and in reality, there's no tax planning that goes into that. There's no tax strategy.
mhm.
And you need to be strategizing all throughout the year. And that's one of the biggest things. And um, we we catch errors from people who just go, "Oh, I do my own tax
Yeah.
prep," or and here's a story of a recent one. We actually had somebody come to us, and they have a small business. They have a great small business. I'm not going to say what it is, but it's amazing. And so her and her husband run this small business. And she goes, "Yeah, the last tax professional, she had us as a C corp." And I go, "Wait, what?" Um, and which they should have been an S corp, and I guess they fixed it, but they were still filing as a C corp, and then they fixed that and they did the right one as an S corp. And she goes, oh, and my dad does my personal taxes, and but I have my S corp on extension, and my dad just finished my personal taxes. And I go, wait,
Yeah, yeah,
how
that doesn't.
how how can you file your personal taxes if you extended the S corp, because you should have included the K1 onto your personal taxes?
Exactly.
And she goes, well, what's a K1?
Yep, that definitely sounds like they need help.
This sums it up.
No,
Or another one of, people give us a call in February, and they're like, okay, what do I do next? Like, how can I made a lot of money, and I'm going to pay, I know I'm going to owe a lot of taxes. And we go, well, when did you realize that you made a lot of money? And they
hmm,
go, well, like September, October. And we would have gone, well, in September, October, or November even, you should have come to us and you should have said, I made a lot of money. How
yeah,
do I lower my tax liability? Because we would have implemented things in that tax year that we can't strategize properly outside of
right.
that tax year.
Exactly. Yeah. And one of the five most common tax planning pitfalls for small business owners is not paying estimated taxes quarterly. And
Hmm.
then that causes
Hmm.
the stat right now, which is 1 in 3 small business owners pay penalties for
Hmm.
underpayment or late filings. So, and yeah, actually 40% of small business owners don't feel confident about managing their taxes. And most don't have an ongoing relationship with a tax planning professional.
Right. And what I have noticed is that most tax professionals are not tax strategists. They're just, a lot of times they're just data entry. You give them what you've done or what your bookkeeper's done, and they don't go over it, and it's
Hmm.
junk in, junk out. Garbage in,
That's one of
garbage
my
out.
favorite sayings. Yeah. Well, because as a financial planner, we're building, clients' financial pictures. When we're creating a financial plan, we're just really not only looking at your investments, but insurance policies, real estate.
Yeah.
We're looking at your estate plan. We're looking at your beneficiaries. We're looking at
Hmm.
more than just investments. And these financial planning softwares are so robust. They can pull in Social Security, healthcare, inflation expectations, return expectations. But I always stress to clients, all of the input information, specifically the ones that I stress are income and expenses, right? Because if that information that we're putting in is not accurate, the analysis, the retirement analysis, all of that is not going to be true. And so that's really what motivated me to become a financial coach, because I noticed people would just be like, I don't know what my monthly expenses are. And then they just give me a
Yeah.
random figure. And then I'm like, I don't feel good about this analysis if I
Yeah.
know that the expense figure is not accurate.
Well, and this is where accountants, or I should say tax professionals who are tax strategists, work really well with CFPs. You have
Hmm.
people who you have most people who want to generate wealth, for one. They want to build wealth. They want
Hmm.
to continue to build wealth. Well, what are the tax implications of building that wealth? You're not thinking, there's a lot of people that aren't thinking beyond that. It's, hey,
Hmm.
I'm getting money. Well, great, but you got to pay tax on that. So we got to put things into place to protect your assets. And I tell people, businesses, individuals, uh, that we're in the business of asset protection. Who are we protecting your assets from? The government.
Yeah. And
You're
I say
not the
I'm in the business of risk management.
right. And it's, you're taking steps back if you're not looking ahead of, well, what's my
Hmm.
tax liability when I do this, when I generate this wealth? And
Yeah.
and you just, it doesn't make sense to go all out and go, yeah, I'm going to make all this money, and you don't get to keep it. And if you allow us to get in and look at what you have, we can strategize so that you can keep as much as we can get you to keep.
Yeah. Yeah, and I definitely wanted to talk, more about one of the last tax planning pitfalls, which I think we haven't really stressed, which is one of the most important, which is poor entity structure selection. And it kind of ties back
Hmm.
to the story you mentioned where your client was a C corp but should have been an S corp. And
Hmm.
so maybe you can just talk about why that matters.
Yeah. So there's something called an entity. And it's, if you are a business, then you are one of certain things. And the typical ones are sole proprietorship, LLC, and S corp. And I guess you can put C corp in there too.
Hmm.
Um, As an S corp, well, when you decide to choose your entity, you need to look at two factors. You need to ask yourself two questions. How does this affect me legally? And how does this
Hmm.
affect my taxes? Because those
Hmm.
are the two key things. As a sole proprietor, you will not have any legal benefits. If you're running a business and you are not an entity structure other than a sole proprietor, that means that if something goes wrong, that your personal assets are in danger of being seized.
Hmm.
There are also no tax benefits to being a sole proprietorship. And when you're paying that self-employment tax, which we call that the double tax, that's roughly about 15.3%. And then you have to go, this is before you even get into the brackets, you have
Hmm.
to pay self-employment.
Yeah.
And um, that's a hard pill for a lot of people to swallow.
Yeah.
And
Or I was just going to share, for me myself, when I stopped being W-2 and then became self-employed in 2024, I felt that double taxation or
Mhm.
just, whatever's 1099 or sole proprietor self-employment income that was coming in was,
Mhm.
I would earmark 30% just in case because I have to account for more taxes.
Right, right. So and I have an interesting short story about that. I do have some clients who are they have small businesses, and they're sole proprietors, and they're not from America, so they never learned. And to be honest, most Americans don't know the difference
Yeah.
between the different entity structures. But the they being that their English wasn't great, they went to a professional, a tax professional who spoke their language, and they,
Hmm.
for 20 plus years, 25 years, they've been a sole proprietor, paying a lot of money. And when they came to me, I go, did nobody tell you to change to a different entity? And they
Wow.
were like, well, what's that? So it's something that a lot of tax professionals don't want, they don't want to give you that
Yeah.
advice.
Or going back to what you mentioned, a lot of tax professionals are reactive instead of proactive. And
Hmm.
as financial planners, we definitely like to be more proactive with tax planning strategies. But I was just thinking what that client really potentially missed out on by not switching to an LLC and maybe even an S corp and then paying themselves wages is they
Hmm.
could have funded solo 401ks up to 23,500 each. And
Yeah.
instead they were only limited to IRAs, which had $6,000 or $7,000 annual maximums. Um, but I definitely am a big fan of tax advantaged retirement vehicles, again, to protect your money from being taxed. And that is the benefit. And
Yeah. And
conversion strategies is a good tax planning tool that we use a lot with clients.
yeah. So the next uh entity that I want to discuss is an LLC. And by nature, the IRS designates the LLC uh, as a partnership. An LLC, all it is a partnership. That's all it is, according to the IRS. You do have limited liability with that. So if your partner messes up and they owe a lot of money to somebody, they're not going to come after you. Um, but there's no tax benefits from being an LLC. Surprise, surprise. Um, I see everywhere. And even attorneys, they go, "Oh yeah, you should be an LLC," and then they're still paying the same amount of taxes because you're taxed as a sole proprietor.
When you're a single member LLC?
Mhm. Any kind
Okay.
of LLC. So even a single member LLC, you're still taxed as a sole proprietor.
Oh, I see for the taxation, but that LLC structure would then at least allow you to access a SEP or a solo, which then helps for investment saving purposes.
Yes. So that's the benefit of that in on the investment side. But on the tax side, there's no benefit. There's no tax benefit of being an LLC.
I would say the benefit, since you have that higher contribution, assuming you did it all pre-tax, is it would lower your, yeah, assuming, you were hitting the IRA traditional max
Right.
before, like that's the only tax benefit, but it's more indirect and more requires you saving into those tax advantage retirement vehicles.
Right. So the next uh, entity would be the corporation. And a corporation is separate and distinct from its owner. And an owner is called a shareholder. And the you have two types of corporations. You have a C corp, so your big corporations, those are C corps.
Mm-hmm.
We encourage manufacturers to become C corps. Small businesses, they're an S corp. So we deal more with S corps. We
Mm-hmm.
do have C corps that we work with. But the majority are S corps. And not only do you have liability benefits from that, but you also have a lot of tax benefits. A lot of tax benefits from that. We're writing things off. We're taking business use of home. We're able to take more, and you don't have the self-employment tax. You pay zero self-employment tax. So what happens is the corporation, the S corp, gets taxed. It's taxed separately, and then we call it a flow-through entity. So we create the K1. It flows down through the profits flow down to you on your personal, and then you report it on your personal.
Mm-hmm.
So what's great about that, you can pay yourself reasonable and necessary
W-2.
compensation. Yes.
Mm-hmm.
And then what you do is you take more out on distribution. And distribution is payroll
Mm-hmm.
tax free. And so that's where you have a lot of S corps who are benefiting from less taxes.
Yeah, and
And
going back to the discussion about trying to hit the maximum in those retirement accounts, so that's where it becomes just a balancing act between W-2 income and those distributions and the tax in, the tax savings. So, but yeah, I love that.
yeah, but here's the thing, and let me go back to the LLC because I left this part out purposely towards the end. Um, so with an LLC, you can do something to get the tax benefits, from the business side, and that is file an S election. You can
Okay.
elect from the IRS to become an S corp. So even though your name has not changed, you are still an LLC. You have elected to be taxed as an S corp. And this is where
Hmm.
LLCs actually enjoy tax benefits, and single member
Hmm.
LLCs, it just down the board. In the eyes of the IRS, you're actually an S corp.
Right. If you file that election.
if you file that election. And what's nice is if you, so there's different thresholds that we say, okay, if you're making this much, then you should probably be this entity.
Yeah.
So somebody who maybe wasn't making enough and they did file that LLC, but they never filed an S election, you have till March of the next year of the to go back and file the S election, and it goes back retroactively, but you have to have the LLC in place.
And I have a client story where she had a bookkeeper, successful small business owner for a few years now, had an existing bookkeeper relationship, existing CPA. I started working with this client under an 8-week engagement. And I was talking, well, to her, and she was talking to her bookkeeper, and she came to me saying that her bookkeeper had recommended that she go from just being an LLC to an S corp, or an LLC filing
Mhm.
as an S corp,
Mhm.
and ran that by her CPA, who said, no, I don't think that's a good idea until her net income is at this level. And so then at that point, we had complete or conflicting recommendations from two important professionals. So, how would you
Mhm.
have handled that situation?
Well, not knowing how much she made, my threshold is 50,000. So if
Okay.
I see an LLC or a sole proprietor making over $50,000, I'm going to say go ahead and either file the S election if you're an LLC, or file to be an S corp. Um, what I
There we go.
have,
We cut out a little bit if you want to just restate what you said.
it, my threshold is 50,000. So if you're making over 50,000, then I would say file the S election or file an as an S corp.
Okay.
So you have to register with the Secretary of State to be an S corp. It's not retroactive, so you don't get the entire year of benefits. It's from when it was recorded with the Secretary of State.
Right on.
But still a great entity to be.
Yeah.
Most, I would say, a good majority of tax professionals are data entry people, and a lot of them don't know how to do corporate tax returns. That's not their specialty, and it kind of scares them a little bit.
Yeah. And
And
I think even more reason to interview a few people.
right, right. And I see this. I wish I wasn't going to say this statistic, but I wish I didn't see weekly and almost daily during tax season of a new client coming over and going, "Hey, I think I'm overpaying in my taxes." And we're like, "Yeah,
Hmm.
you did." You know, and it's really a burden on the taxpayer, on the small business owner, because what's happening is either you're not paying somebody enough to get qualified bookkeeping, and
Hmm.
that's messed up, and then you got to pay me to do the bookkeeping, and it's going to cost you twice as much.
Yeah.
You're not going to a qualified tax professional who is, I use the example of, we're like a Sherpa, and we're guiding
Hmm.
you up Mount Everest here, right?
Yeah.
And you're making money, you're making your way up the mountain and everything. And if you don't have a good Sherpa, you're coming back down that mountain a lot sooner than you think, right?
Yeah.
And
Yeah.
so it's so critical to, and yeah, tax professionals can cost money. And you know
Yeah.
what? You get what you pay for. And as I said before, garbage in, garbage out. And if you don't
Hmm.
have somebody who's protecting what you made, then you're going to lose it. Those
Yeah. And I think,
profits, yeah, those profits are going to go to the IRS, and you probably don't want it to. You're probably hoping to keep a lot of it.
yeah, and I think this is a really nice segue into the last section of our show, which is talking about barriers and mindset shifts and some of the psychological roadblocks that stop people from maybe even starting to work with a professional is fear of the IRS,
Mhm.
procrastination, shame around how disorganized their finances are, and just
Yeah.
feeling overwhelmed around the tax complexity or legalese. So maybe what advice do you have for some of the people that are struggling with the small business owners that are struggling with some of those psychological roadblocks that's maybe preventing them from finding a better partner for tax strategies?
Right. There's so many out there. We're in California, and the tax code doesn't get much more complicated than here in California. We
Hmm.
do, but we also do taxes in all 50 states. And I'm not just using this as a plug for me. I'm using this as there's tax professionals out there, and they may not be in your area, but now with technology, you can find them. You
Yeah,
can do,
exactly.
and you can do your taxes with somebody who might be in another state.
Hmm.
And but the thing is that um, if you're out there trying to make money, then you need to know the ways to protect it, or at least know somebody who's qualified to protect
Hmm.
it. The IRS doesn't want to just throw you into jail. That's a common misconception. And the IRS is really good about scaring the population. And they do. Most of the
Yeah,
population, if I don't do this, I'm going to go to jail. And that's not it at all. And honestly, the
yeah.
IRS generally wants to work with you. So don't
Hmm.
avoid the IRS.
Good
Um,
advice.
yeah, don't avoid the IRS. And if you are in trouble, or if you do get in trouble, work with them, because the
Hmm.
longer you wait, the worse it's going to be for you.
Hmm.
But if you go to them and you say, hey, I need an offer in compromise, or I need this or that, there's people out there that can help you.
Hmm.
The next thing that I would say is plan. Always plan. You need to not be afraid to look at the numbers. And I know math is a most people don't like math. And honestly, there's a lot of software in out there that can help you. And I know
Yeah,
it's confusing to look at financial statements sometimes and trying to discern what that all means. But don't be afraid to look at the numbers, and don't use your bank account as if I have money in the bank in my bank account, I'm okay. You're
right.
you're not, because those numbers, your accounting is the heartbeat of your company. And
Love that.
when you're not, it is, because it doesn't matter how big your company is. You could have one employee, you can have 100 employees. Nothing escapes accounting.
And I feel the same way, again, how we're talking about how businesses and households. I always say, from a personal financial planning standpoint, cash flow is the heartbeat of your financial plan. And so, yeah, I just
Yeah.
think going back to there's so many parallels with accounting and budgeting. It's just really for one's for a business, one's for a household.
The other thing that I want to say is, and I know there's people out there who disagree with me, but I know that there's also a big push to kind of dispel these rumors. Is don't be afraid of expenses.
Hmm.
And as a business, it's okay to have expenses. You have to be smart with your money. And sometimes that is discerning, okay, I need some new equipment. I need a new
Yeah,
vehicle. I need this. And there's a smart way to go about that.
right.
Don't be reckless. Don't be negligent with it
Yes,
and go, yeah, I want to drive a new car. But be smart about it, but don't be afraid of expenses, because really at the end of the day, as an accountant, as a tax accountant, what we're doing is we're matching up income, gross income, so your revenue, and we're matching that and taking all your expenses against that. So you need a new printer, or you need office equipment, or you need the new
hmm,
computer, or whatever. We're going to take it off. And if your accountant isn't taking it off, then you know that you need a new accountant.
right.
Um, Sometimes accountants take it a little too safe, and it honestly, if it's in the code, it's fair game. A lot of
Right.
accountants are afraid of business use of home. I'm not afraid of business use of home. We've been doing it for 20 years, and it's,
What
it's in
if
the
you
code.
have a sole proprietor, non-LLC, who
Hmm.
outside of his W-2, or actually, let's just say it's all 1099,
1099.
independent contractor. If he takes itemized deductions for his business, home
Hmm.
use, let's just say he's using it for something, and if it's lower, the itemized deductions than the standard, would he end up still going with the standard? Or are you able to get the standard plus some itemized when you're an independent contractor?
Well, that totally is dependent on how much is made.
Okay.
So a sole proprietor, and I know I said that you know it you don't have legal benefits, you don't have tax benefits, and just sometimes you don't need that right away.
Hmm.
Does that make
Yeah.
sense?
Yeah.
So one of our tax strategies is, let's say you have W-2 income, and you have a side hustle, or your spouse has a side hustle, and you use that to try and lower what you've made on that W-2, because with the
Hmm.
W-2, there's not a whole lot that you can do unless you own a house, and we're taking interest income and all that kind
Hmm.
of stuff. But the fact of the matter is that there are times where it's okay to be a sole prop.
Hmm.
um don't take losses all the time, every year, because then the IRS is going to come back to you and they're going to go, well, it doesn't look like a business, it looks like a hobby. And you
Yeah,
can't claim
exactly.
hobbies. So it's just a matter of being careful, and every tax return is different. Every year is different. You're not making the same thing twice. And if you are, the IRS is going
Hmm.
to look at you like, don't report the same amount every
Yeah,
year.
of course. Yeah, and so we definitely talked about the pitfalls, and now one of the things I wanted to highlight is how you can potentially avoid that by collaborating with companies such as yours and your husband's. Um, what would you or what would you classify your company as?
We classified as several things, actually. We classified as business coaching.
Okay.
But the new thing too now, what we see is we see more than ever that people need to protect their assets, their money,
Hmm.
from their wealth, from going from one hand to the other. You know what I mean? And you do a great job of that as well as a CFP. CFPs are great about helping you generate that wealth and building wealth, and
Tax planning
the
strategizing is what
right,
we need to do.
right. And but but if you're not strategizing, and you're not planning, or even over planning, then that money is going to go from your hand to another hand.
Into
and
the
and you
government's hands. I'm just
Yes,
kidding.
yes, it's the government. Um, and and the whole purpose of you to generate wealth, to build wealth, is it's with you. It stays with you.
Hmm.
And don't find somebody, whether it be a bookkeeper or a tax preparer, who's just data entry, where you just give them the numbers, and they just do, you know, plug the numbers in, and that's what you pay. And um, that's that's not how it should be. That's You have the right. You don't get gold stars by overpaying your taxes. And it doesn't
No.
go towards the next year, and the IRS isn't going to like you better just in case, and that's not how it works. And the IRS looks at you as, hey, you got to pay your
It's a free
taxes.
loan. Yeah, when you end
Right.
up getting a refund is how some
Right.
clients think of it.
Right. And that's great. And we say that too. And I'm glad you brought that up. And you don't want, even paying throughout the year, you're giving the IRS a interest-free loan.
But
Okay,
you also
well,
don't want to underpay because then
no,
you're
you
going to
don't want
get
to
hit with a
underpay.
penalty.
You want to be just right. And that's hard to gauge sometimes.
Right. Yeah, and so I really think that the power of collaboration with CPAs and, well, CPAs, EAs, tax professionals will summarize, the four that you really described, and financial planners. So there's CFPs. Yeah, I didn't really dive into there's a bunch of different types of financial advisors.
Right.
Um, but then even attorneys, well, tax attorney was kind of one of them, but there's estate planning attorney, family law attorneys, real estate attorneys. And the more that I guess I stress to clients that you understand that it's going to take a team of professionals collaborating, communicating, working together to get you that
Hmm.
best result, to make that strategy seamless and actually implementing it, and that it's going to impact not only your taxes, but your cash flow, your retirement timeline,
Yeah,
your
absolutely.
investments. So I think this has been great. And now I want to, kind of wrap up this episode. And what would you say is the one action item that you would want a small business owner to do this week to improve their tax plan?
Don't be afraid to look at the numbers. Get into your books. We just finished Q2. Look at Q2. Look at what you did in Q2. And if and compare that to Q1. Or you can even compare it to last year's Q2. But these are the things that looking at your books objectively, not, just I don't, you know, I
There's
don't
no
look.
shame. It's a judgment-free zone
It
to
is.
try to.
It really is. And as a tax professional, we're not out there judging you. We honestly want to help you, um,
Mhm.
because we need more small businesses
Yeah,
and we
I think
need you
I
guys
only
to
judge when
succeed.
clients don't like implement or don't want to change.
Right, right. Just it's one of those things where it's like here you are, you're like this, and you're holding, whether whatever your bookkeeping or just these secrets or whatever, and you're holding on to that for dear life, and you just kind of need to palms down, let that go
Yeah,
and trust and trust people, delegate to people, and
yeah.
you'll find that when you relinquish this, you're you're going to have that better picture into your business.
And you're going to get time back. And I
Oh,
think time
yes.
is our most valuable asset.
It
Yeah, and
is.
I would say that my one action item for small business owners is to review. Well, at first I was going to say review your tax return, but instead of doing that, I would say confirm your effective tax rate, not only your marginal tax rate, but what is your
Yep.
effective tax rate? And if you don't know what that is, Google it. I'm just kidding.
Yeah.
It's taking your taxable income and then dividing it by, oh, wait, I'm sorry. Actually, I don't know the exact calculation. Let me look it up unless you know it top of mind. Effective
Yeah.
tax rate formula. So it's just going to be your total tax paid divided by your taxable income times
Mhm.
100 to turn it into a percentage. Um, but yeah, that's definitely, and the reason that's more important than your marginal tax rate, because your marginal tax rate is only what your last dollar gets taxed at, whereas the
Mhm.
effective is every dollar is getting taxed at that effective tax rate.
Right.
And I think
Right.
we definitely shed a lot of light on a lot of different strategies that clients can use. And is there any final words before we wrap up this episode?
Yeah, just get out there, and for all you small business owners, get out there, take some risks, and not like bad risks,
Calculated
okay,
risk.
but
Yeah,
calculated. Yeah, calculated risk. Get your posse together. It's all your professionals, and
exactly.
and that's what I call it. I call it a posse. Get your
I like
posse
that.
together, and because these are the people. You should have a good attorney. You should have a good accountant. You should have a good CFP. This is your
Hmm.
team. This is the people who are going
Exactly.
to back you up, and get out there and get those people, because they're going to help you and they're going to guide
Yeah,
you. Don't think
exactly.
that you can do it all on your own. And maybe you can. Maybe you're Superman or Wonder Woman, but but in reality, a small business owner is so busy, and get these people, and where it's just one phone call and you go, hey, can I do this?
Yeah, and really do your due diligence of interviewing these people and understand what they are doing for you and
Yeah.
what the going market rate is, but also stressing your point about you get what you pay for. So
Mhm.
be willing to pay a little bit more for that higher level of service. I've found it's definitely worth it because I've tried
Yes.
to cut corners and pay less, and I learned that lesson the hard way.
Yeah. Yeah. It comes back to bite you.
Exactly. But this has been so great. And where can people find you if people would like to connect?
Well, you can, I'm in Orange County, California, and you can give me a call. You can visit me at my website. It's Western Premier Business Coaching. No, I'm sorry. It's westernpremiercoaching.com. And all my
I'll include a link
information.
in the summary, so I'll get that
Yes.
from you.
Um, and that's one of the businesses. The other business is Summit Tax and Accounting. So we operate out of both of those businesses. They are sister companies, so we do a lot of business coaching. We do, taxes, bookkeeping, and we actually teach. So
Yeah, and so if someone is thinking about starting a business, they're a good potential person to reach out for your business coaching, right? And helping them
right.
think about what's the right legal structure and
Hmm.
all of that.
Yeah, yeah, definitely. And I've gotten a fair amount of calls recently, and just, okay, well, now what's the next step? And so yeah, we love helping people. We love helping small businesses, and we really do want to see small businesses succeed. That's the backbone of America. And
Yeah.
we don't want to give that away to large corporations.
And here in Arizona, we're actually known for being a small business hub. For
Yeah.
every one national business, there's two small businesses.
Oh, I love
Um,
that.
yeah, but I'm so glad we met, and I definitely know we'll stay in contact. And so I'll talk to you very soon.
All right. Thanks so much.